What is up, YouTube? Welcome back to Stocks by the Numbers. And right now we're looking at EDR, came out with earnings, and looking like a nice beat. Looking like a nice beat on the EPS and the revenue. Revenue came in 1.47 billion versus estimates of 1.33 billion. They increased full year guidance between it was 5.2 billion to 5.45 billion. They increased it to 5.235 billion to 5.47 billion. So I know it doesn't seem like a lot, but in the end, more is more, right? So if you can beat these estimates and continue to pump out good earnings on good pay-per-view numbers and good live attendance events numbers and everything like that, then more power to you. And apparently that was the fourth quarter in a row that they raised guidance. So EDR stock is what I'm saying. It looks like they're building some momentum. They ended up finishing this quarter net income positive by was 517 million. However, it says that 463 of that could be attributed to the gain of one of their divisions. So you're still looking at what, 50 million, 54 million close. You can say that was just them, their business model, net income positive for the quarter. So, this is exactly, what we were talking about. We were talking about, well, first of all, the stock is undervalued, but we're talking about a business model that, this is entertainment. And this has become our country's greatest resource, believe it or not, if you really think about it. And, with everything hopefully slowing down, on the virus front, you keep these stadiums and arenas at full capacity. And, you do a little advertising and word of mouth, and you see more and more people, hitting up these pay-per-views. This is inevitable. I saw an article that said 95% of the owned sports properties revenue segment was attributed to the UFC, and they took in a 296.7 million off of that segment of the business. So 95% of that is like 282 million. And if you extrapolate that, multiply it by 4 for 4 quarters for the year, you're looking at about like 1.2 billion, just about. And the company did what, 5 billion in revenue last year. So it's a decent chunk of their revenue is coming from the UFC, and a lot of other revenue is coming from just their branding, their events experiences, and rights revenue, and their representation revenue. It says it's up to a demand for talent and comedy touring. People, they're done with that lifestyle. Everybody wants to go back to normal, and they want to go back out. And, why not see a concert or a sporting event or something like that? So supposedly they earn revenue from the Super Bowl, the Miami Open, the Final Four. So they have their hands in a lot of pies. And, the more I look at this company, I mean, like I said, entertainment, great resource. It's a resource, but it's our greatest export if you really think about it, because there's a lot of items that we don't make anymore here in the U.S. And if you look at a situation like this, we kind of push onto the world like all of our entertainment, our artists, all of our songs, the movies, the actors. And now you have the sports and the athletes. All of these things have become worldwide. Movie comes out. The more people on the other side of the world sometimes see it, than we do. So at the end of the day, to be in the entertainment business, I think is a good way to go, especially with the way they're doing it. Right, because you have the pay-per-view numbers, so you have segments like the UFC, you have these branches that can still bring in and generate good revenue without people even being there. But I also saw that apparently they made a purchase not too far back from the NFL, the On Location Experiences, little organization there, and apparently that's a hospitality firm and a luxury experience organization. So, when you're in those luxury boxes, I guess you're getting a better experience. So, hey, I mean, if you're able to go to the event live and you're able to do it in style, then sure, why not? But it also said something was interesting that I saw was that the NFL converted its stake from that deal into EDR stock. right? So now you have the NFL that owns shares of Endeavor. So, in my opinion, this is going to be the company starting to roll on all cylinders. They said pay-per-view numbers, again, were up across the board pretty much for the UFC. I think they mentioned like one bad pay-per-view event. But, and remember, they're still recovering from all the rescheduling and everything that's been going on and happening, any restrictions that might still be up. The UFC used to do a lot international events. They used to try to hit up all these different countries to just kind of like give their entire fan base like some live events, so everyone around the world could enjoy it. And right now they're more domesticated, but I really think over time it's only going to get better. And right now after hours, you were seeing a little over $20 a share, and I think it could hold that and possibly go even higher, $21, $22. If we switch over here to stock charts, what are we looking at here? Maybe like 2180 right here. It looks like the support of this candle. And if you come back up here, you got some support and resistance around the 24, 24 and a half level. So, I think it's only going to be up and up. And I did say it was an overreaction. And, now you're sitting here with a company that beat on earnings, beat on EPS, and raised its guidance for the fourth quarter in a row. So, all good things for Endeavor, EDR. If you're long on the company, or if you're looking to trade the stock, should be good for us. If you're short on the company and you bet against it, personally, I'm very sorry. But, we know that sometimes they go up and sometimes they go down. So, once again, this is Stocks by the Numbers. Thanks for stopping by. If you have any questions, comments, or concerns, leave them in the comments section. If you liked the video, give it a thumbs up and subscribe to the channel. And thanks for stopping by. Have a good day.